The graph at the time of this recording is giving us a bit of a pullback to the downside after losing that bullish momentum to continue pushing higher to give us a break above the significant swing high we made above the 0.1203. And at the time of this recording, we are holding within a Fibonacci key area of support that lies between the 0.095 and the 0.0807. And on today's update video, I will be discussing a negative structure that can easily unfold here on the daily chart in the next coming days, and also give you the worst case scenario that can also play out to the downside. So make sure that you stick around till the end of the video. And I want to start the video by saying that this week I'm expecting a lot of volatility on these charts because we have the FOMC meeting where we expect a rate cut. And if by any chance we get maybe a 50% basis point rate cut, that will be mega bullish for the markets, and that is going to give us a massive reversal here on this chart. But if by any chance we don't get a rate cut, then I will expect a massive dump. And basing my analysis on the additive structures from the lows we made on the 7th of April here on the GRT chart, I have been observing this blue additive structure where we picked impulsively in the formation of that first wave. Then we started a corrective structure to the downside in the formation of that second wave, where you can see that we saw a pullback into the minimum target area highlighted on the charts using that yellow target area, an area that we fully maximized, and at some point we broke out of that target area to the downside, taking out some liquidity on the lows we made down here on the 7th of April before we started another bounce. And that was the first indication that we could be getting a failure of these 1-2 setup. But for now, I'm still giving it the benefit of doubt, expecting that we can easily bounce in the formation of these wave 3, whose minimum target areas can be given by connecting the fib extension from the low of the first wave to the high of that first wave, then connecting the Fibonacci's to the lows we made in the formation of that second wave. And also doing the area that you need to pay attention to lies on the fib level 1.618, and that lies above the 0.1751 as your next target area, an area that we can easily hit, then get a bit of a slight pullback in the formation of that wave 4, and then continue pushing even higher in the formation of that wave 5 to the upper side. And that is the bullish case scenario that can easily unfold as long as we continue holding within this blue target area, an area that I came up with as a Fibonacci key area of support by connecting the fibs from the lows we made on the 22nd of June to the highs we made above the 0.1203. And you can see the area is between the fib level 0.5 and the 7.8, where I have been expecting that on this pullback over here, we should hold within this blue support box, get a reversal within the area, and then continue pushing even higher in the formation of that larger wave 3. But if by any chance we get a massive nuke and maybe at some point we break out of the blue target area to the downside, then I will be expecting a reset of the lows we made on the 22nd of June and also on the 7th of April below the 0.0659 in the next coming hours or maybe days. And that is the worst case scenario that can play out in case we don't get a rate cut in the next 72 hours. So that is all that I expect here on the GRT chart on the short term, and let us be patient and see how that plays out, and I will ensure you stay up to date.